Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, August 25th, 5:05 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market in an uptrend / with caution. That's because we have not seen the market reaction to the big speech from Fed Chief Jay Powell tomorrow morning at 10 a.m. Eastern Time. However, it seems like the markets front ran that speech today with a very strong day. We'll get into that momentarily. You can see on the trend gauge over here, still showing neutral. However, we've got the sub arrow now back to green, pointing toward bullish for market leaders, as really leaders have outperformed the indexes over the last 3 days. Short term, a close back above the 21 for the S&P and the NASDAQ 100, multiple closes for MDY and IWM now, still on neutral. We want to get that second close and see the reaction to Jay Powell's speech tomorrow morning, but neutral pointing to uptrend there. We're still firmly above the 50-day moving average. That's our medium-term indicator. And when I say we, I mean the market, the 5 major indexes that we track in these videos. Long-term, the 200-day moving average, all 5 indexes still below the 200-day moving average. We'll check those charts momentarily. But what just happened today, as I alluded to it, a range breakout, all indexes back above the 21. In the title of last night's email, I said expect a move on Friday, but we got it a day early, and this is not unprecedented. And I'm going back, always doing post-trade review. I've noticed several times the market moving before the day before. We were expecting some big news from the Fed, and we certainly got that news today. And then anybody that was positioned short expecting bearish reaction tomorrow or hawkish news from Fed talk today, and there was some from Bullard, the market completely shook it off, really had a strong squeeze into the close. The G6, our 6 growth ETF, composite up 1.88%, S&P 500 up 1.41%, NASDAQ 100 up 1.8%, Dow up 1%, mid caps up 1.66%, Russell 2000 small caps up 1.5%, global diversified 60/40 stock and bond portfolio up 1.12%, our in-house GROTECTION portfolio up 1.03%. We'll get into the tail of the tape, the indexes, and some charts of interest. But first, let's get into why we do what we do here at Revere. We are trend followers. This is our ideal setup here last November. Market trending higher above the short-term 21-day exponential moving average, that's the green line, the medium-term 50-day moving average, that's the red line, and the black line, the 200-day moving average. When we start to break down and go sideways, we'll get a little bit out of the way, pull some things back, our stops will kick in, and we'll let the market take us out and raise our cash position. When we start to really roll over with force, the short-term moving average will roll over, the medium-term moving average will roll over, we'll head lower, and eventually if we break below this black line, the 200-day moving average, we get extremely defensive at that point. All severe bear markets take place below this black line, this 200-day moving average, and until we can get back above it, there's just an overhang in the market that you've got to be showing concern. Let me show this chart here. This chart that reminds me why we take priority 1 as risk management. When you protect how much you can lose and then participate in market uptrends, the making money part will take care of itself, but you need to avoid these harsh drawdowns. Average of 6 severe bear markets since 1968, down 44.5%. You need an 80% gain to get back to even for that. If you encounter one of these as you're approaching retirement, you can see your entire nest egg devastated, and that's like I said, job 1 for us here at Revere is keeping you out of harm's way. And you can see the damage that was done under the 200-day moving average this year. We bottomed out at 24.5% from the top. Tried to make a rally up here. We ran into the 200-day moving average. We got back into the market, started dipping some toes in, and then finally more and more as we started showing profits up until we hit this 200-day moving average. We pulled back a little bit over the last couple of weeks. We were pretty defensive on 3 closes below the 21, but today the big reaction that I expected on Friday, we got today. And as I've said, I've gone back over several big Fed inflection points, and sometimes the reaction shows up a day before. So we went with it today, increased our exposure, and the day ended at the highs. And certainly a good sign. Now we'll see what happens, the reaction after Powell's speech. And if we get up to the 200-day moving average, we'll see if we can get above it today. One note I want to bring to your attention is this hook up in the stochastic on the daily chart. We have been trending lower since we broke down below it late last week. That's a good sign for the bulls. We'll see if we can continue higher on that. So that's your S&P 500. That's how we decide our exposure here at Revere. And if you're interested in an approach like this, reach out to me. You can email don@revereasset.com, or you can phone 855-REAL-WEALTH. That's 855-732-5932. Good chance Danny Stewart will answer that line, and he will have a great conversation with you about finances, stocks, investing, wealth planning, estate planning, Social Security, anything under the sun that's finance related. Dan's your guy, so feel free to reach out to us. So that's the S&P 500. Let's go to the NASDAQ 100, which never quite made it to the 200-day moving average. Like the S&P, had these 3 closes below the 21. Like the S&P, had to move back above the 21, and this hookup on the daily stochastic. So that's bullish. Let's go to the Dow Jones Industrial Average. Not quite a hook up, but it stopped going down, going sideways here now. Moved back above the 21, the closest to the 200-day moving average of the big cap, the 3 big cap indexes. Mid caps right into the 200-day moving average, as we had 3 days right along the 21, break out of that range up into the 200-day moving average. And small caps, IWM, actually made higher highs each of the last 3 days. So bullish divergence there versus the big cap index. As you can see, the relative strength line here this week popped above it, above the ADMA, getting close to the downtrending 200-day moving average. And again, this hookup on the stochastic. So good news today. If you're a bull, if you're a bear, you could smell the burning bear fur into the close. That was quite a squeeze into the close. Let's look at the S&P 500 on a 5-minute chart. And here's the easy gap up, and then a big strong move up into 41.83. Harsh sell-off down to 41.56. You were wondering if it was just a tease, but this is the good part. Look over here, 41.56 yesterday was the high that we made before we failed, and we came back down above the 21-day exponential moving average, which was about at 41.51. Okay, so we got back above it. We came back, tested it twice, and held. That's big news. That implies that what was resistance now turned to support on 2 tests intraday. Doesn't mean it can't be broken tomorrow, but it's good news for the moment. Held at 41.56, held at 41.53, trickled up to 41.75, a little bit of a base sideways, and then this big squeeze into the close when we broke above 41.75, coming up on 3:30 in the afternoon Eastern time, all the way up to closing near the high of the day at 4,200. Definitely best case scenario for the bulls today on the indexes, and also from a leadership participation standpoint. So let's get to the tail of the tape now, break that down, and then we'll take a look at some of the charts of standout stocks today. So headwinds, we still got the big macro headwinds, no change there. Dollar at a 5-week high. It's gone sideways the last 3 days while the market has played catch up. The NASDAQ McClellan Summation Index hooked down from overbought early in the week. This doesn't update until 6 o'clock Eastern time on stock charts, so we'll see what that looks like. But the 5 major indexes, daily stochastic did hook up, which is this goes from a headwind to a tailwind. So that's good news there. Put call ratio at 0.9, VIX at, let's see, down to 21.78. The VIX was down 4.6% today, and fear and greed out of 48. So we want to see the second close to get off of this possibility that we're going to have a bear case. So again, the reaction to tomorrow is going to be an important, but we can cement back to the bull case if we can get that second close above the 21 and at least a neutral reaction to Powell's speech tomorrow. When I read this headline, I was looking at the indexes, expecting them to turn lower, and they held up remarkably well. Fed head Bullard, who is a noted hawk, said, in his opinion, markets are underpricing. Their baseline should be higher for longer inflation. So that's not a market-friendly comment. The markets took it in stride and just kept moving higher into the close. My expectation, neutral coming into today, that's flipped to bullish now with today's reaction. Let's hope that sticks. Again, I hate to beat a dead horse, but we do have to wait for the reaction to the Fed head tomorrow. He by far carries the most weight of the Federal Reserve Board. So from a resistance and support standpoint on the indexes, we had the minor gap up and then just trudging higher, breaking through several resistance layers above this 21-day exponential moving average and above right into this 4,200 closing at 41.99. Same thing with the NASDAQ 100, this big fib level that we've been batting back and forth. This 315.52 broke above that, also broke above 318.67 to close near the high of the day. The high of the day was 320.60. We closed at 320.58. Can't ask for much more than that. Here's the intraday action. The overnight and opening ranges, very important. I pay attention to those all throughout the day to see if the bulls or bears are in charge, especially this open 30-60 range and the overnight range. So what was strong today? Bonds, which means rates are down. That is beneficial for stocks. 11 out of 11 S&P sectors were up. The laggards on a relative basis, they were higher, but their defensive staples and utilities and energy started stronger, ended so. The dollar down on the day, biotech taking a break, DBA, that's agriculture, strong. Standouts were semiconductors. Now this is a story here because first of all, let me change these charts and get rid of the stochastic so we can take a little bit of a better look. Now let's take a look at NVIDIA. This was a big deal after hours last night. I mean, they really did not have a good earnings report, and they reduced the revenue projection by $1 billion for the next quarter, and the stock finished up 4% on the day. So whatever Wall Street has priced in from a performance standpoint on NVIDIA, the stock was up today. And when bad news is good news, you have to pay attention to that in individual stocks. You also have to pay attention, as we've been mentioning, growth stocks have been outperforming the past 3 days while the indexes were lagging. That was kind of telling us something under the umbrella of what you see on the headline print on the indexes. Coming into today, when I was going through charts last night, there were just so many good setups. I hadn't planned to get much more aggressive, but I couldn't disregard the action in the indexes. So we took off 10% of our SDS hedge, so we still have half of it. We added 5% SSO, so net long we're 15% SSO, which is 30% S&P 500. We bought plug. It was on my list, and then pre-market there was some news that they signed a contract with Amazon. It had a gap up, floundered a little bit, but had a decent close. Let's take a look at that chart of plug. We're looking for some follow-through strength on this tomorrow. You can see the gap up. Didn't act great intraday, but had a very strong afternoon coming off the bottom, closing mid-range. some resistance here between the 30 and 32 area. If it can clear that, great relative strength going back to late June on plug. So that was the only buy today. Other than that, we were already positioned pretty well with our other 10 longs. Now we've got 11 longs. And the bottom line for today, strong break above the 21, front running Powell Friday AM. I've got a question mark there. You never know for certain, but our net volatility adjusted beta came into the day at 0.95%, with the trim of SDS, the add of SSO, and the buy of plug up to 1.34%. So theoretically 34% more exposure to the market than just having an all S&P 500 portfolio. Let's take a look at support and resistance. I needed to move this up. I didn't. This should be up here right over the COVID rally and above this declining 150-day moving average. So the next level is this 42.28 to 42.32, and then the declining 200-day moving average on the S&P 500. Let's take a look at that to see exactly how far we are away from it. 2.6%. So above the 21, what we want to see for tomorrow is a test and a hold of the 21 on any pullback. Worst case scenario would be a close below the 21. That means this is a false break above this little flag that we were forming here on the indexes. How about some individual stocks that stood out today? I already showed plug. GFS, which we got stopped out of, had a nice little break above this downtrend line. Stopped out of it just from a capital preservation standpoint, really looking to get back into this, as I do believe it is a leading stock. LNTH, something we still have a partial position in, had a good day. Two nice up days there. Wolf, our biggest position, hungry like the wolf for profits. As you can see, this making new highs, not quite new highs, but new highs after this gap up. You got this 122.22 over here, but this is when you buy a gap up on big volume, this is picture perfect behavior for what you want. The first day up, if you can catch some of the move, fantastic. You can survive a couple of days of a lower volume pullback, that's normal behavior. Then 3 days up on this, remember, while the indexes were doing nothing and then cooperating today and it making new highs, this is exactly what you look for when you buy a gap up on big volume. And as always, you've got your stop out below the low of the gap up day. Our stop up is certainly moving higher now as we're making progress. So Wolf looking pretty good. LNG, our second biggest position, taking a little bit of a break today after a very strong run. SWAV, another one of our top three, pulled back yesterday after 300, closed near the highs today, up at 310, all-time highs. Great product, great accumulation in this stock. Again, this is another one that has had a big gap up on strong earnings, 5 days up in a row after that. That's extremely rare. When you see that, it has my attention. We didn't start getting into it until this area here. We missed the initial gap up, but we've added 2%, 1%, 1%, 1% throughout the little congestion that it's having in here, and then the perfect bounce off the ADMA is exactly what you want to see. So this picture and the picture of what I just showed you with Wolf, that's how you want those stocks to behave when you buy gaps up. Speaking of gaps up, Snowflake, let's revisit this from overnight. Up 23% on pretty big volume, but still below its 200-day moving average. Let's see how this goes from here. These ones that have been gapping up on strength, but still have a lot of overhead resistance from the left side of the chart, haven't fared very well unless they get above their 200-day moving average. Let's see what else. I mentioned GFS. ON, we still got a position in this that had a great day today. Up slightly below average volume, but that's great price action on ON. And tune into the podcast, which we'll be recording tomorrow and will be released over the weekend. Michael Ramos, our newest employee, is going to take a dive into the silicon carbide component of EVs and solar, and talk a little bit about some of the stocks that are involved with that. A lot of them are certainly leading stocks right now. One of the strongest stock in the market, Celsius, continues to act great. Tesla had its 3-for-1 split today, not acting so great. The equivalent of the post-split number is 297. It closed slightly down on the day, holding its 21-day exponential moving average, being held back by its 200-day moving average. But this is a pretty decent consolidation here from a relative strength standpoint. While you're consolidating, if you can hold up with the market, that's a pretty good sign. Tesla has all the hallmarks of something that is just waiting to bust higher. And maybe tomorrow's the day of it. Sometimes stocks act weird after they have 3-for-1 splits, or after they split, period, as big holders readjust their share count and so forth. But this consolidation has been on below average volume leading into the split after much higher volume on this move up. I want to get involved with this. If it makes a move above, you can see where I've got my alert set here. I think that is going to wrap it. Yes, it is. So as always, like to hear from you what you think, what you'd like to see, what you agree with, what you disagree with. My email, don@revereasset.com. The phone is 855-REAL-WEALTH. If you go to the website and you put in don@revereasset.com, we want your email. We don't want the email of who you're sending it to. We want to provide feedback to your feedback. If you've got a comment, a question, or a complaint, some people, I think, just take advantage of the fact that you can be anonymous and send trolling messages to us. We certainly get a kick out of those, but reach out to us, don@revereasset.com, or the phone is 855-REAL-WEALTH. That's 855-732-5932. So Powell in the morning, wrapping up Thursday, August 25th. This is Don Vandenbord, Just the Facts here at Revere. Thanks for listening and have a great day.